Good afternoon, ladies and gentlemen. Welcome back. We have a special extended show here with this interview. Actually, I'm pretty interested with what the company is doing, and I think there's some potential there. That's the reason why we invited those here in our studio. Let me introduce you to Pierre Laurin, President and CEO of ProMetic Life Sciences.
Good afternoon.
Good afternoon, Mr. Laurin. Pretty complex, your stuff. I'm not in a very good position to explain what it is because I have a little problem understanding some of it, but I do believe that there's a great potential out there, and I saw over the last few years, because I've been following this company for a long time, that the price is not doing any better, but I can see that the company is doing better.
Yeah, well,
can you explain us in an easy way what your company is doing?
Thank you. Well, there's a major disconnect between the progress of the company, and the share price. It's to the advantage of the investors. The company has two main sector of activity. In-house, we're developing therapeutics. This is more related to what people know the biotech to be the blue sky. We have very promising drug candidates that we develop internally, and the business model there is to partner with big pharma. But for quite a while, for at least 15, 18 years, ProMetic has steadily developed smart filters. We call them affinity filters. They are designed to build, to recognize and bind a specific protein, whether it's a good therapeutic protein or a bad protein that cause toxic effects or even pathogens. So when you put those filters in a bioprocess within a GMP facility, in a big pharma facility, then those filters can improve process economics, they can improve the product profile and create best-in-class or improved generation of established drug. So that's where we're starting to make a major foray. I mean, it's a long cycle, as you know, in the biotech field. But what's reassuring for the investor is that over 38 different big pharma have validated our technology. It's part embedded now in 12 FDA-approved drugs. So there's no issue of proving our technology. It's proven, it's validated, it's scaled up, and it's being used by more players. So this then drives the revenue.
If I understand, you're making some sort of filters that can identify some of the proteins and can only target those and take them off.
Exactly.
Of the product, but only this.
Exactly. I mean, a
protein catcher.
A protein catcher, and the business model is very much like as if we developed and invented Velcro, and at that point, we're a Velcro manufacturer. But Pampers company will come to us and say, we'd like a soft Velcro disposable. And Nordica Boots will say, we want a tough one that goes around, long, black, and you can reuse 10,000 times. So these Velcro are fundamentally from the same technology, but they're modified to adapt to the product. How we make money is by designing the Velcro with the application, with a client, and sign long-term agreement where they buy the Velcro from us. In some cases, there would be no product without our Velcro. In this case, we get royalties on their sales as well. Right? So it's a quite varied annuity revenue model that all rely on our Velcro, on our filters.
I know that you have some contract already, like in Europe, they use some of their filter to double check their I think human blood or just animal blood, but they can identify the, I don't know in English what's the name of the sickness, but the crazy cow.
Creutzfeldt-Jakob disease. It's a mad cow disease.
Mad cow disease. Okay.
Scrapie disease in sheep and yes,
so
I mean
you can do this sort of application.
Yes, well, in fact, I mean, and this is one of the major demises to where the stock went from $2 to where it is today. Okay, we have successfully developed this filter, and it's CE marked. I mean, it's approved for sale across Europe. We've co-developed that with the American Red Cross. It's the only filter in the world proven to remove this mad cow disease, like for human, out of plasma and blood, so that when you transfuse blood, you don't transmit the disease. This is a very, very insidious disease that can be transmitted by poorly sterilized surgical instruments or blood transfusion, organ transplant, right? And it's not going away, this problem. However, despite the fact we were approved in late 2006, our shareholders were expecting revenues from this, all right? A simple sale of filters to go on all the blood donations in the UK, for example, would represent $35-40 million revenue annually for us. It's been delayed, postponed, studies, commissions, experts, what's going on. They're all coming down to realizing now that there's an issue still, and the filter is safe. They've funded £20 million study to show now that the filter is safe, and 942 transfusions. So they are all going back to the Ministry of Health, and we're hopeful that to see a resolution where they'll adopt that in the UK, and then France. And I mean, if you look at the potential for that application alone, it's $225 million a year, just that single application. So we're not counting on it, we're not forecasting it, because it's something that is done, developed since 2007. All right. So we've been developing our business with industrials, and Octopharma and large, biotech and pharmaceutical company in Europe are our clients. They actually are the one who funded us during this very difficult crisis where biotech companies were unable to raise as much or access as much capital. So we've been very fortunate, but our business model is such that it's a free option with the therapeutic. It could go through the roof, but in any case, even if the therapeutic failed, we have a business itself that can drive the stock back to the $2-3 over the next 2 years, steadily, quarter by quarter, performing with sales and very good margins. Right?
You have some important partners like Celgene.
Yep.
And Celgene is one of the companies that lended money to you, I think.
$10 million, 5% interest.
So that's fun.
Yeah. I mean, that's where, the investors should understand from these moves that we mean a lot to those partners. It's cheaper for those partners to lend us money than to take the risk of us being unstable financially. Now, they're not going to lend us money so that our stock perform better. The point is for them to make sure that we're sufficiently capitalized to supply them. So it's a self-serving agenda, but it's a non-dilutive agenda for our shareholders too, because we've accessed over $20-25 million like that without issuing shares.
Yeah.
Okay. So, and even if the number, it's ironic, right? People look at, you have 375 million shares. Well, you know what? When we'll be performing at 10 cents earning per share, everybody will love the liquidity. Yeah. So you're doomed if you do, you're doomed if you don't. Right now, it's something that scares people. When we have cash, you can always buy back the cash, the shares.
But you always been cash flow negative, and I think you expect to be cash flow positive.
Exactly.
In the second part of the year.
Exactly. So watch that space, as we say, right? It doesn't take much for this company when you're getting close to that equilibrium to tip over and now becoming an earning per share company, right? And it's been long awaited. The shareholders that know of the company understand that there's been no fundamental failure. The delays have been related to even Katrina. I mean, the hurricane in New Orleans, when you start looking at the sequence of events, hurricane in New Orleans forcing Congress to tell the American Red Cross to focus on disaster relief. At that point, Imosol, we had a big contract with them, goes bankrupt. The delay, the filter in the UK, all of those things were political, geological in nature, and affected and delayed our progress, which meant that we had to go back to market to fund ourselves as opposed to generate revenue.
Yeah.
Now that the divisions start generating revenue, the game is going to finally come to what it was supposed to be, right?
Yeah.
One side of business generating revenue, good margins, and the other one offering a bonanza. So that's what the shareholders liked about the model.
You may break your break an arm, you call 911, and then there's an ambulance coming to you because you're rated 2. But then 3 heart attacks happen, then they push you back to priority 10.
Yeah.
Even if you got a broken arm, now there's a guy that dies, and that's what happened over there too.
Yeah.
And so I think the company has progressed quite a bit. How do you compare today as opposed to where we were before all of the market failed in 2008? Before you were at 40 cents and you had institution that invested at 40 cents. But how do you compare right now to where you were in 2008?
Well, all divisions...
At 4 times less.
Yes, exactly. All the divisions have made major progress. We've signed, on the UK, we've signed long-term agreements that confirm and firm up our long-term revenues forecast. So we'll be able to provide guidance as we go forward, in terms of what kind of revenue we can expect, as opposed to those scattered, yo-yo performance. And we've now been able to license more contracts to more players adopting our technology. It's always the first one buying a non-IBM computer always take the risk. But when you realize that, Chrysler is buying this type of computer, now I'm okay. Now I can follow. So the curve of adopters getting into our technology is going to accelerate. We have this new facility in Laval that we've just leased for 20 years that will enable us to leverage our technology, start exporting finished products. So now we're moving from making 2-3% on the value of the drugs to 30% on the value of the drugs. So all those things have moved forward compared to 2 years.
So you're not trying to sell the technology by royalty itself. You want to be a producer of your own product.
A producer of our own product, and this is strategically aligned with some of our clients. You have players, for example, in China or in Europe that doesn't want the FDA to come and inspect their facility. Our facility will become a portal to get into the U.S. market, right? So a lot of our clients would love us to supply more than just the filter. Can you actually do the product for us? And all of a sudden now we've leveraged our technology 10 times over. That's where the magic is with our company.
And so far in the next future, I don't think you're going to issue new share at this price. You would be crazy doing that. I'm expecting you to do a bigger move and go get some money in the public. But I think what your goal is to get the price back up on your own. Yeah. Yourself, without too much help. And but what's coming up in the next few months? You have something in discussion right now with a big biotech U.S. company, for instance?
We have several irons in the fire, as we call it, several deals that would provide cash upfront and funding. So that's what we owe to our shareholders to deliver, is those type of deals that are non-dilutive and contribute to the top line. You have product sales. These are for established product, and then you have service revenue. All this creating a mix that pulls ourselves into a non-cash burning mode. Okay, so those deals are, some of them will happen in Q4. Our game for us is to maintain sufficiently funded until those deals arrive. So we're not going to start raising, $10 million to have a better looking balance sheet. That's not the right thing to do. And we've been avoiding doing this for 3 years now. If you look at how we behave in 3 years, well, everybody, either fell off the map in Quebec, and it's been a disaster. We've managed to only dilute by 8%, I think, the whole company, despite the need for cash, right? And the big contribution from our strategic player lending us money, as opposed to raising cash at low share price value has been the trick.
Are you a potential takeover by a bigger company?
Anyone is potential. I mean,
I see Valent Pharma that has been running through acquisition in the recent year.
You have hundreds of companies trading at 25% of cash they have in the balance sheet. Okay, you have Eli Lilly that says, if they don't rectify their pipeline, they're up for takeover. It can happen to anyone. We're a complicated story, and we have pretty interesting poison pills.
Mr. Laurin, we are very close to the end of this interview. I think you have an interesting company at a very interesting price here, a good level at 10 cents. There's no panic. The stock is even going up today when the market is plunging 400 points. So I think it's something to be watched, and we are advising people to keep an eye on your company, as I think 83% of 24% of our viewers knew already about your company, and now the rest knows you better. Will be following you. Thank you very much for being with us.
Thank you very much for your comments. Thank you.
Thank you.